Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all that's been happening across the globe and also tell you about the domestic cues that you need to watch out for, alongside the stocks that must be on your radar today. But first up, let's get started with an eye on the globe and see how the US markets fared last week. And it's, if you talk about the US stock futures, they were largely flat and this morning as well as last night. This because the markets are bracing for another eventful week as far as Wall Street is concerned. Now, this comes after a volatile stretched market by valuation concerns, sector rotation and shifting expectations around the Federal Reserve's rate cuts. All of this weighed on the high-flying artificial intelligence trade in Wall Street last week. Now, Dow Jones Industrial Futures, they slipped about 58 points or 0.1%, while S&P 500 and Nasdaq Futures, they hugged the flat line. Now, for the week, the Nasdaq Composite ended down about 0.5%, dragged lower by declines in mega-cap names like Alphabet, Amazon, Broadcom and Meta. The Dow and S&P 500, they managed mostly to end in the green with modest weekly gains, although both of them saw sharp pullbacks as far as trade on Thursday is concerned. Now, as we enter the new week, this week brings pivotal catalysts. Nvidia reports its earnings on Wednesday, which is a key test for the AI trade and broader tech sentiment. Walmart and Home Depot, they will deliver quarterly results as well, offering a deeper read on the strength in the US consumer sentiment heading into the holiday season. With macro crosswinds still in the play, investors will now be watching for these updates very closely to gauge whether the recent market rotation that is going to continue or if AI leadership begins to reassert itself. So yes, those are some of the cues that we'll be watching out for. Well, it was a mixed trade on Wall Street and lots of cues to watch out for as far as the Wall Street is concerned. But Srishti, how are things on the crude front?
Quite interesting, Kanishka, because what we have seen is that, yes, crude oil is seen to be dropping a bit as Russian port resumes the operation. Crude prices bar the gains from the previous session lows, and as of now, Brent crude oil is hovering around that $63 per barrel mark. It's IEA that recently warned of a significant surplus next year, as well as when it comes to the WTI prices, they were also seen to be falling a bit. Along with that, it was interesting moves coming in on Bitcoin as well. Bitcoin fell nearly 5% to a 6-month low. Bitcoin extends the losses for the fourth session. But along with that, we are also tracking interesting moves when it comes to the gold prices as well, because just on Friday, it has been a 3% decline coming in on gold, and that's indeed a big one because safe haven gold is now down and below that 4,100 per ounce mark and is now trading close to that $4,089 per ounce as we speak.
All right, so that's about the commodity trade that we are tracking this morning. But let's get started and track some of the most important global stories as well this morning. First up, US President Donald Trump has snapped up at least $82 million worth of corporate and municipal bonds between late August and early October. That's according to new ethics disclosures. Now, Trump's portfolio tilts towards municipal debt, Wall Street banks, chip makers and big tech, including new buys in Broadcom, Qualcomm, Meta, Home Depot and Goldman Sachs. He's also purchased Intel bonds right after the government acquired a stake. This adds to fresh scrutiny to the timing.
All right, and Indian farmers just got a breather from Washington. Trump has rolled back the tariffs on more than 200 food items. Products like tea, coffee, spices and cashew nuts now move tariff-free again, a shift that could revive $2.5 to $3 billion worth of exports, according to FIEO. Now, the rollback also signals fresh momentum for US-India trade talks.
Moving on, the US and China may be close to locking in rare earths understanding by Thanksgiving. Now, Treasury Secretary Scott Bessent says that he's hopeful the deal will be finalized, building on last month's framework where Washington agreed to pause 100% tariffs and Beijing held back on new export licensing for critical rare earth minerals and magnets as well. Now, Bessent has also pushed back against claims that China plans to restrict access to rare earths for US firms with military ties, saying that he's confident Beijing will stick to commitments after the Trump-Xi meeting in Korea.
All right, in South Korea's biggest companies are rolling out major domestic investment plans after sealing a high-stakes tariff deal with the United States. At the meeting with President Lee Jae-myung, Samsung pledged $310 billion over 5 years to expand chip production, add a new line by 2028 and build AI data centers outside Seoul. Now, Hyundai announced $86 billion through 2030 for AI, robotics and autonomous tech, while SK Group and major shipbuilders also committed to stepping up the spending at home. The push comes at Seoul pledged $350 billion in US investments to avert Trump's highest tariff.
Moving on to some macro data then, Japan's economy shrank 0.4% in the third quarter. That's a small contraction than the 0.6% drop expected by the economists. Now, this ends a 5-quarter expansion run. Weak private consumption, squeezed by rising rice prices and high utility bills, and a negative drag from net trade drove the decline as US tariffs hit exporters. On an annualized basis, GDP fell 1.8%, again softer than forecast, but yes, bright spots remained as the government spending and capital investment posted their strongest gain in 5 quarters.
Jannik Sinner has capped his greatest session yet by retaining the ATP finals title, beating world number 1 Carlos Alcaraz 7-6, 7-5 in front of roaring home crowd in Turin. Now, Alcaraz created the only break point of the first set, but Sinner shut the door, took the tie break and then sealed the match by breaking in the final game. Now, the win closes out a year where Sinner reached all 4 slam finals and captured the Australian Open and Wimbledon, while Alcaraz claimed Ronald Garros and the US Open.
Next up, Japan's Sakurajima volcano has erupted 3 times in a night, blasting ash nearly 4.4 kilometers into the air and disrupting travel across Kyushu. The eruptions, the strongest in over a year, forced around 30 flight cancellations after ash drifted across the region. Now, the volcano is one of Japan's most active volcanoes, erupting very frequently, but Sunday's plume was the tallest since last year's major event.
All right, but for this, viewers, it's time now to step into a very short break. Don't go anywhere, lots more to talk about on the other side.
Kanishka Sarkar and Srishti Sharma. Time now to take a look at how the Asia Pacific markets have opened up, and it's a largely mixed day coming in for the Asia Pacific front. First up, let's see how China's Shanghai index is doing. It's down about 0.4% right now at that 3,974 odd level. Hang Seng 2 is trading in the red, down about 0.3%, close to that 26,500 mark. On the other hand, Japan's Nikkei, that's also trading in the red right now, down about 0.3%, close to that 50,200 mark. So yes, 160 points of downtick coming on the Nikkei. This is despite better than expected macro data that we just highlighted before the break. So yes, that's how the Nikkei is doing. Now, if you talk about South Korea's Kospi index, that's the ones that managing to trade in the green as far as the Asia Pacific front is concerned. It's up more than 1.5% right now, close to that 4,080 level. So yes, that's South Korea's Kospi index. On the other hand, Hong Kong's Hang Seng index, that's also trading lower today, more than 100 points of down over there as well. Actually, it's taken a breather from that level. It's down about 0.3%, but just 76 points right now at that 26,496 level. So yes, that's how the Asia Pacific markets are faring. If you talk about the Nifty, we did manage to end above that 25,900 level on Friday. So yes, let's see how we open today. And for now, it's a positive start is what we are expecting for the Nifty. An uptick of about 50 or more than 50 points, or nearly 60 points is what the Nifty implied open is suggesting. So yes, let's wait out for that and see how the Asia Nifty opens up in trade today.
All right, but with this, let's also tell you which are the stocks that you should be watching out for in today's trading session. And firstly, let me take it across to my colleague Ashesha, who's standing by with a list of stocks to be in focus today. Good morning, Ashesha. Take it away.
Well, yes, good morning, and let's get started. First up, let's talk about Tata Motors PV. That one reported its numbers on Friday and revenue has come in much below what the street was working with. Margins and profit after tax have also come in below expectations. Now remember, they've gone ahead and lowered their guidance as far as their JLR operations is concerned. FY26 guidance with respect to EBIT margin has now been revised downward and stands at 0 to 2%, and free cash flow outflow is what the management is projecting to the tune of $2.2 to $2.5 billion versus nil earlier. So very weak set of numbers. Management guidance is also poor, and that is the reason Tata Motors passenger vehicle could see some bit of profit booking in trade today. Meanwhile, IRB Infrastructure, positive news flow coming in over here. Associate company has bagged a letter of award for an upfront consideration of about 9,300 crores, and this is from NHAI. So on the back of new order win that has come through, keep an eye out on IRB Infrastructure as well. Anand Raj, meanwhile, has signed a memorandum of understanding with Andhra Pradesh Economic Development Board. This is to invest about 4,500 crore in development of data centers. So very big news coming in for Anand Raj on the back of this 4,500 crore investment in data center business. Keep an eye out on this counter as well. Kotak Mahindra Bank, meanwhile, will be considering stock split in the board meeting that is scheduled to happen on the 21st of November. Narayana Hrudayalaya has reported very strong set of numbers for the quarter gone by. Revenue is a beat, EBITDA has come in better than what the street was working with, and PAT as compared to estimates has risen by as much as 13%. Revenue up 10% YOY, but it has reported a loss this time around, but that has narrowed on a year-on-year basis. But across the board, very strong beat as compared to estimates, and Narayana Hrudayalaya will also be in focus on the back of this.
All right. Thank you so much, Ashesha, for getting us all those details. But with this, let's also tell you which are some of the other counters that we will be watching out for. And first up, let's talk about Divi's Lab. Positive news flow coming in as the inspection at the Unit 1 manufacturing facility Telangana has been closed with no observations and for Form 483. So positive news flow for Divi's Lab. VIP Industries is the next stock that we're going to be talking about. Very weak set of numbers coming in. It's been a top line miss that creates a highest EBITDA lost in over 13 quarters, and even all the other numbers were seen to be way below the estimates. The consolidated revenue declined 25% YOY, and the company has reported a loss of 143 odd crores. V2 Retail, strong set coming in, wherein the top line nearly doubles. Revenue has jumped almost 87% on a YOY basis, while the net profit has been reported at 17 crores versus a loss of 2 crores same quarter last year. Utkarsh Small Finance Bank, the company will be in focus on the back of a weak set of numbers. The interest reversals impact the net interest income. The credit cost remains elevated, impacting the profitability. The NII has seen a decline of 37% on a YOY basis. The company has reported a consolidated loss of 348 odd crores versus a profit of 51 crores on a YOY basis. And lastly, NMDC is going to be in focus on the back of a positive development on the back of a price hikes, where the company has hiked the lump prices, to be precise, Baila lump prices by 50 rupees per ton to 5,600 rupees per ton with effect from 15th of November. So on the back of that, we will be watching out for NMDC in trade today as well.
All right, then lots of stocks to watch out for, but let's also put the spotlight on some of the cues that we'll be watching out for today. Well, back home, trade data and unemployment data is something that will be released, so all eyes on that. In terms of global cues, we have Japan industrial production data as well as GDP data that we will be watching out for in terms of global macro data updates that we have due today. But shifting focus back home, lots of corporate action as well. First up, let's put the spotlight on Power Grid, which is going, the board of the company is going to mull a fundraising. So yes, that one remains in focus. Other than that, Adani Enterprises is to trade X rights issue in the ratio of 3:18 today. So yes, all eyes on that and how the stock reacts to that development. Other than that, in terms of IPO watch, lots of primary action, primary market action there. So Fujiyama Power Systems IPO, that closes for subscription. It had opened on November 13th and today is the last day to subscribe for this IPO. So yes, that's about the primary market action. Now in terms of other events that we need to be watching out for as far as the globe is concerned, Fed Governor Christopher Waller is expected to speak later today. So yes, all eyes on those comments that will be coming up later in the evening. Other than that, New York Fed President John Williams is also expected to speak alongside ECB Chief Economist Philip Lane. He is going to speak. So yes, all eyes on the comments that will be coming from these global economic leaders. Other than that, Hong Kong Global Maritime Trade Summit is expected to take place today. So yes, all eyes on the commentary that will be coming from this Global Maritime Trade Summit. So yes, let's watch out for that, especially with given the action that's been happening in the Indian industry as far as maritime is concerned. So yes, lots of cues to watch out for, and let's see how that pans out.
All right, interesting day coming up. But with this, let's move on. And Bennett University hosted its 7th annual convocation ceremony over the weekend, a momentous celebration marking the culmination of years of dedication, perseverance, and academic excellence for its graduating students. Their inspiring journeys will serve as a beacon of motivation for the graduating class as they step into their professional pursuits. Take a look.
Bennett University hosts its 7th annual convocation ceremony today, a momentous celebration marking the culmination of years of dedication, perseverance, and academic excellence for its graduating students. The graduating students were felicitated with the Chancellor's Gold Medal, 4 Chancellor's Silver Medals, and 17 Vice Chancellor's Gold Medals, recognizing their outstanding achievements across multiple disciplines. The Bennett University Convocation 2025 also witnessed the conferment of honoris causa degrees upon 2 visionary leaders, Mr. Nadir B. Godrej, Chairperson, Godrej Industries Group and Managing Director, Godrej Industries, and Mr. Ritesh Agrawal, Founder and Group CEO at Oyo Hotels and Homes. The distinguished recipients are being honored for their extraordinary contributions to industry, innovation, and entrepreneurship. Their inspiring journeys will serve as a beacon of motivation for the graduating class as they step into their professional pursuits.
Today marks a proud milestone for Bennett University. This academic institution is celebrating its 7th annual convocation. On your screens also you can see graduates joining me, and not just graduates but faculty and special guests have all come here today to celebrate years of hard work and resilience, and finally it has come to a culmination for many. We'll now be speaking to, in fact, tossing it over to these graduates from Bennett University and understand what this journey has meant for them. Over to you first. Tell me which course you have studied from Bennett and what has been your biggest learning.
So I did my MBA from Bennett University. It was an amazing experience and I missed my college days a lot.
Right. Which faculty experience has also been the best for you so far?
Faculty experience is best for me is marketing. Marketing is best in MBA.
Marketing was your favorite, you say?
Yes.
Now, you tell me, you're also a young graduate here. Which stream are you graduating for? How was your experience?
BTech CSE I have graduated from, but one of my favorite faculty experiences would be Warden sir, because he saved me from every situation that I was in.
Acha, so your warden relationships is the one that you're going to be missing so much. You tell me, which course are you graduating for? How has Bennett been for you?
I'm graduating from BTech CSE and it's been really good. I enjoyed every moment, even the bad moments, I enjoyed them.
So, engineering generally considered a very rigorous curriculum. How did you feel? Do you feel that Bennett has prepared you to be able to tackle real professional world challenges as well?
It has. In fact, I'm working in an MNC right now, and I'm I'm confident enough to be there and work. So it has all come from Bennett University.
So you're already speaking to a corporate employee, correct?
Yeah.
That's excellent. Tell us about your journey. How was the convocation also like? We had Ritesh Agarwal, the founder of OYO. We also had Mr. Godrej here as well. What has been your learnings?
It was a great experience with the convocation, and I'm graduating BTech CSE as well. The lab infra is the best here. That's what I can say.
The infrastructure you found it to be the best.
Yeah, it's pretty much a Bollywood campus, all that I can say.
A Bollywood campus is also what students are telling us. So tell us, what have you Are you also an engineering student?
Yes, I'm also an engineering student. I've just graduated right now. I did my computer science here. Yeah, so talking about my college experience, it has been a lot of a mixture of everything.
Right.
So it's been academics, it has been sports, it has been relationships, it has been friendships, right? So I think a very good mix.
Well-rounded.
Exactly. So I guess convocation is just the icing on the cake right now.
Now, convocation is the icing of the cake is what students are also telling us. So definitely a lot of joyous faces, a lot of excitement all around us as we report from the Bennett University campus here in the National Capital Region. With video journalist Sachin Rawat, this is Kritika Tiwari reporting for Times Now.
When we founded Bennett University, the vision was clear: to be a global leader in education, research, and innovation, empowering the higher learning ecosystem. We set out to build a university that prepares young people not only for the careers they will pursue, but for the lives they aspire to lead. From a bold idea, Bennett University has grown into a vibrant academic community of 14,000 students and 800 faculty and staff members. Each member of this community, from our scholars and teachers to our mentors and staff, contributes to an environment that encourages a lifelong pursuit of excellence.
I would now request Honorable Chancellor, Bennett University, to confer the degree of honoris causa upon Mr. Ritesh Agarwal for his outstanding contribution to redefining global hospitality while representing India's innovative spirit.
I hope you recognize that until today, the tests came with answer keys. Now no more. From tomorrow, they will come disguised as obstacles, as challenges, as self-doubts, whether I'm doing a good job or not, and opportunities which will feel like chaos at first.
I would now request Honorable Chancellor, sir, to confer the degree of honoris causa upon Mr. Nadir B. Godrej.
The need of the hour for our nation is comprehensive education. And just like you, as one can see, I also will get a degree. For yours, you work tirelessly. Mine, of course, is honorary. Bennett University serves the nation, so Times Group deserves commendation. The times we live in are very tough. The going can get very rough. The world is changing very fast, and nothing new seems like the past. So to survive in this rat race, new skills at a rapid pace must constantly be acquired to ensure that you're not fired.
All right, then, with that, it's time now to slip into a very short break. We'll be right back with more news and updates coming up on the other side.
Friday, wherein this time around for the passenger vehicle division, we have seen a weak set of numbers coming in because on the bottom line, the company has reported a loss of 6,368 crores versus a profit of 3,521 crores, though the revenue from operations is actually down almost 13 odd%. But along with that, in terms of the EBITDA as well, that's an EBITDA loss operationally that the company has reported for the tune of 1,043 odd crores. But the big headline for Tata Motors remains to be their JLR division guidance, because that has been cut down sharply from 5 to 7% of EBIT margin guidance for FY26. That has been now brought down lower to just 0 to 2%. And along with that, the company is also saying that their free cash will now experience an outflow to the tune of 2.2 billion pounds to 2.5 billion pounds in FY26 versus just a zero figure that they were expecting earlier. Along with that, in terms of the EBIT margin number this time around, that seemed to be in negative of 8.6 odd% versus 4% in Q1 of FY26. So a weak performance herein. But in terms of the commentary as well, the management highlighted that yes, of course, this has been a washout quarter on the back of the cyber attack, but the kind of pressure remains to be in the European market. The tariff related impact is already being seen into the numbers, but they are hopeful that Q3 will be better, and Q4 in terms of the volumes they are expecting that to be normal when it comes to Tata Motors JLR numbers. When it comes to the India business, there the company has performed very well in terms of the margin specifically, because that has seen an expansion from 4% in Q1 to 5.8% this time around. The margins along with that, that has seen to be improving, and the management is optimistic of a growth outlook going ahead, where they're saying that they expect the overall an all-round performance and a recovery in the second half of H2. When it comes to their overall guidance, the company is also highlighting that they are expecting a double-digit growth guidance for the India business with the full year guidance of 5%. Elara has actually come out with a note. They are recommending a sell with a target price of 363 rupees. They're saying that the India growth to be driven by the uplift in the customer sentiment. The key monitorables remains to be the further deterioration in demand and supply chain turmoil for their JLR division. So going ahead for Tata Motors, new product launches for the India business is something that will drive the business, but the JLR pressure continues to be seen when it comes to the guidance as well, is what the management is indicating.
All right, so that's about Tata Motors, but let's move on and talk about another earnings candidates, which is Marico. Now, it reported a mixed set of numbers for the second quarter of this fiscal with inline revenue and PAT, but margins were lower than expected. Mithali is here to take us through more details. Mithali, over to you. Good morning.
Hi, good morning. So, Marico's number was seen steady. All of their revenue, EBITDA and PAT were broadly in line with the street expectations, while their margins saw a slight miss. Starting with the consolidated performance, the revenue grew by around 31%, while the EBITDA grew 7.3%. If you talk about the PAT, it was down around 0.7% year-on-year basis and slightly below the expectations, while the operating margins also shrunk down to 16.1% versus 19.6% a year ago. Now, if you talk about their segmental highlights, the Parachute reported a 3% volume degrowth, though value growth surged around 59% year-on-year basis. Saffola volumes were seen flattish, but value growth came in at strong 19% of growth. In the premium portfolio, the serums, male grooming and skincare segment, the Q2 annualized revenue run rate crossed 325 odd crores business, while digital first brands exited the quarter with an ARR of around 1,000 odd crore rupees. International business grew 20% in constant currency and largely in line with the expectations. If we talk about the management commentary, it was upbeat, and Marico expects gross margin expansion to continue. It also aims to grow the food portfolio by over 25% CAGR, targeting an 8 times jump over FY20 levels by FY27. Digital first portfolio is also expected to grow around 2.5 times FY24 ARR by FY27. The company also planned to expand their foods portfolio and the premium personal care revenue share to around 25% by FY27 and is targeting double-digit EBITDA margins in these segments. So overall, if you see, it was a stable quarter for the company. The strong top-line momentum, resilience, domestic volumes, and also confident long-term outlook seen from the company ahead.
Thank you so much, Mithali, for getting us all those details. But let's move on to another news flow. And CNG supply across Mumbai has taken a hit after damage to a major GAIL pipeline feeding Maharashtra gas Wadala station. Now, the disruption has forced CNG pumps across Mumbai, Thane and Navi Mumbai to shut, affecting thousands of auto rickshaws, taxi and ride-hailing fleets that rely on the fuel. MGL says it has prioritized residential supply, ensuring piped gas to the homes remains uninterrupted, while industrial and commercial users have been asked to switch to alternative fuels. Now, the utility has not given a timeline for the restoration or explained what led to the damage inside the RCF complex.
All right, then let's move on and tell you some more news updates that we're tracking this morning. Now, after NDA's sweeping victory, the date is set for the formation of the government in Bihar, likely on November 20th, that is this week, while Bihar CM Nitish Kumar is likely to submit his resignation to the governor today before the formation of the new government. Next up, in the world of cricket, South Africa defeated India by 30 runs on the third day at Eden Gardens in Kolkata on Sunday. South Africa has come out all guns blazing, with off-spinner Simon Harmer managing to pick up 4 wickets. With this performance, South Africa has taken a 1-0 lead in the Test series.
All right, but for this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Set of numbers for the second quarter. Revenue that has seen a growth of about 16% on a year-on-year basis, coming in at 5,171 crore rupees. Now, this was driven by strong execution, especially in the smart infrastructure and mobility segments. Other than that, if you talk about EBITDA, that was up about 13%, but margins, they softened slightly to that 11.9% level. Net profit, on the other hand, that declined by 7% to that 485 crore rupees level. Now, remember, this is partly due to a high base that was created by a one-time gain last year. Order inflow, meanwhile, that remained healthy, rising about 10% to 4,800 crore rupees, which takes the total order backlog to 42,253 crore rupees. If we talk about segments, the digital industry segment that stayed weak because of a low carry forward backlog and muted private capex. In fact, if we talk about the management commentary, they say that government-led capex that remains very strong, and recent income tax and GST reforms, they have also boosted the festive demand for them. Now, they remain cautiously optimistic about a pickup in private capex going forward. So, yes, very important commentary coming over there. Other than that, the company has also shifted to an 18-month financial year ending March 2026. So, that's what they have highlighted, and now we will be calculating results basis that. Now, if we talk about the brokerage commentary following this mixed set of numbers where the margins were relatively soft this time around, they remain mixed. Nuvama maintains a whole call with a target price of 3,084 rupees. That's citing expensive valuations but strong order visibility for the company. PL Capital, on the other hand, has an accumulate rating and a target price of 3,470 rupees. It has highlighted long-term growth drivers such as public capex, digitization and value unlocking from the energy business demerger. So yes, mixed commentary coming from brokerages, but largely positive, though margins were soft this time around.
All right, that's about Siemens. Let's watch out for that. But moving on, in the very latest episode of ET Now Masterclass, we have Vallabh Bhansali with us, who explains how the Adani Group has excelled in the infra space and is leading from the front. Let's listen into his views on the infra development.
Well, Infosys brought the power of governance and it became a model. Reliance brought a power of, capital markets, execution of a different class, and they taught, there was a time, anybody wanting to build a refinery, a big project, they were taking people, there was only one place, go and take people from Reliance. Today, there are many companies of that kind. So also in building infrastructure, Adani has shown that we can do it. Before that, infrastructure is not only execution capability in terms of pouring cement and molding steel, but it's also in terms of managing the environment. That there are so many local situations to deal with.
Stakeholders.
So many stakeholders. So many governments in this country of different hues. How to manage all of them. So there are too many moving parts and there are softer aspects to building infrastructure in India, which are not easy for everybody to manage. So you have to develop that capability. But one person shows the way, 20 follow. Just as a lot of people followed Infosys, a lot of people followed Reliance in terms of setting up, SR set up a big refinery. Our friends from Indonesia, they set up a PTA plant.
Yeah.
So people will follow. So Adanis have definitely taken a lead in setting up world-class projects and executing them on time and creating cash flows and then encashing it. So, you know, I mean, they were able to place their equity to very smart investors. So I think different businessmen have played different roles at different points of time.
All right, then, that's the word from the wise. But moving on, well, Nifty's Q2 season delivered a third straight quarter of double-digit earnings growth, even with a sixth consecutive quarter of single-digit profit gains. EPS upgrades, they came in through at 1.2% for FY26 and 0.5% for FY27, with PAT upgrades of 2.3% and 0.9%. Sector-wise, OMCs, telecom, metals, they outperformed, whereas IT majors broadly met expectations. Banks posted stronger than expected growth and stable asset quality. Ashesha is here to take us through the entire roundup of Nifty earnings today.
Well, yes, we are at the end of the second quarter FY26 earnings season, so we decided to take stock of the kind of performance companies have reported in the second quarter across sectors. And first up, let's put the spotlight on the IT sector, where favorable currency aided margins for the entire sector in the second quarter. Remember, most large companies have reported better than expected set of numbers on account of muted expectations that the industry was sitting on. So clearly, margins were better than what the street was working with. Now, as far as the Tier 2 versus Tier 1 capital is, the mix is concerned, Tier 2 companies reported better set of numbers versus Tier 1, and they outperformed. So several factors. Demand, however, continues to remain muted. Management commentary was not great, but nothing negative as such that came in from the management commentary as far as the IT sector is concerned. So Tier 2, as I mentioned, these players outperform Tier 1 companies and the large IT companies. So that's as far as IT performance is concerned. Let's also put the spotlight on the BFSI sector and banking first, where margins were stable. We did not see any meaningful compression as such as far as the net interest margins are concerned in the second quarter. Margin lift is likely to lift earnings in the second half of this year as well. So the management commentary continues to remain very positive. Asset quality continues to remain steady. So that is another positive for the banking sector in the second quarter, and this is only likely to strengthen in the second half of this year. So that's as far as the banking sector is concerned. Let's also talk about the NBFC sector then, where the second half growth is expected to be very strong. Any kind of stress with respect to their MFI and MSME pockets is likely easing in the second quarter and is likely to ease further in the third quarter as well. And margins were also broadly in line with what the analyst community was working with. So that is as far as NBFC sector is concerned. Let's also talk about the consumption sector then, where several companies reported margins which were better than expected. Britannia, ITC, Dabur, to name a few. Remember, second quarter was impacted on account of GST disruption, but this is likely to improve going forward. Stables delivered solid performance in the second quarter, but the management commentary is very positive. They say volumes were hit on account of GST 2.0, but they are likely expecting improvement in the second half of this year. Demand continues to remain stable and input costs are also softening. So clearly it was not a bad quarter. We have seen good growth across sectors, and as far as consumption is concerned, store additions continue to remain robust. So yes, banking, financial, NBFC, IT, for all of these sectors, perhaps the management commentary is that the second half of the year is likely to be much better than the first half.
Thank you so much, Ashesha, for getting us all those details. But with this, let's also tell you, how did the consumption sector perform in the quarter gone by? Herein, we have seen an improvement for the most of the consumption companies in the FMCG space, especially in Q2, where the surprise has come in with respect to the margin front. We have seen an expansion for some of the companies in terms of the margins when it comes to Britannia, ITC, as well as Dabur. Now, the overall good show coming in from staples. The volumes ex Tata consumers were hit by a temporary GST-led impact, wherein we have seen that GST rate rationalization did impact the near-term numbers, but all the management commentaries have highlighted that they are expecting this particular issue to subside recently, and a bounce back is expected in the second half. Now, the demand is expected to be stable. The raw material cost is seen to be improving. But in terms of the quick commerce space, it's Eternal that did come out with a guidance wherein with respect to the store addition, the guidance remains strong. The food delivery is expected to improve is what they are highlighting in the times ahead. So what we can call it is a mixed Q2 for FMCG. The volume growth was a bit uneven in the quarter gone by. We have seen that impact coming in because of the GST, but majority of the companies have highlighted that they are expecting a better H2. So that's about the consumption earnings in Q2.
All right then, so that's about the consumption earnings, but let's also put the spotlight on the word coming from the wise yet again. Now we have, in a world where everything from gold to crypto to equity seems to be rallying, what really diversifies your portfolio? Stephen Dower breaks down why correlations are rising, how to think about active versus passive strategies, and where investors can really still find true balance across assets and geographies. Let's take a look.
India, from a foreign perspective, has been a country that's had a lot of diversity in terms of its economy. India would be a country that really shows that old saying that the economy is not the markets, right? The Indian economy is really not a technology economy, but that is what, it's overweighted in the market. So that, again, argues even in India that you'd want to broaden your investment base. You'd want to pick a wider range of equities than just really focus on this narrow group that's done so well for so long and may very well continue to do well. But there's a risk involved in that.
No, I mean, the question on why multi-assets are also doing well also arose from the fact that, typically or traditionally one would think is that gold is a safe haven asset. There are geopolitical risks around the world, and maybe that's why, and of course, a lot of countries buying gold as well, piling up on that, in fact, which is why gold would be doing what it's doing right now. But then what explains the risk on more in equities?
Well, gold's a funny asset. It's very difficult for an asset manager like me because the way I typically think is anything that has a discounted cash flow I can value, and gold, inherently doesn't. As you alluded to, I think a lot of the rise in the gold price is Russia and China and the other central banks buying so much gold. I think it's been a very overcrowded trade. What it is not indicating is a concern about inflation, because that's not reflected in other markets. It's not really even showing geopolitical destabilization. So it's an odd situation. I think we're living in a world where the money supply is increased, and so it kind of makes sense that gold adjusts for that in some way. But the real thing I would say is gold doesn't seem to be the diversifier that it.
All right, but with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team who put this show together. Thank you so much for tuning in.
In association with Bank of Baroda के संग त्योहार की उमंग